In the equity quadrant, taking a look at the December Dow contract, which had a pretty much straight up day today. A strong rally down only about 47 basis points on the lows at 33,683. So a little bit less than a half of 1%. On the highs, though, up 1.5% at 34,319, finishing the day about 1% better. It was right up there with the NASDAQ as the best performing major index of the day. The Russell was actually the best performer, up more than 1.5%. A very strong rally with good volume. We almost reversed the weekly loss that we find ourselves in with the Dow. We'll see over the next couple of days if it can exceed that, if this rally were to continue. But it was a strong rally with good volume. So it looks like the legs are underneath the equity markets, at least for now. We had the FOMC meeting with its announcement and its statement and the press conference. And it was a little bit more hawkish than most analysts were at least willing to speak on publicly. But the market didn't take it bad at all. The Fed did say that they were pointing towards an early taper. They were going to finish that taper some point in the middle of next year. They also clarified in the press conference, Fed Chair Jerome Powell did, that it's safe to assume that they won't hike rates till the taper is over, because why would they do that? That would be at cross purposes if they were still purchasing assets, but they were going to hike rates. So they said they likely wouldn't do that, so you could make that assumption, but pretty much everything else, Jerome Powell talked more hawkishly than people were used to, but he was right in line with that substantial further progress that they had claimed they'd already made. The Fed was hawkish, but the markets took it very, very well. As a matter of fact, you could say that the markets cheered. Now, when you look at what happened to the yield curve, the flattening that we saw in the yield curve from yesterday's settlement to the post-FOMC levels, the 2-year, 30-year part of the yield curve went from 164 basis points to 158. The 5-year, 30-year went from 102 basis points to 97, and the 10-year, 30-year went from 50 basis points to about 46 basis points. And overall, that kind of flattening means that rates are likely to go up in the short term. They did during today's session post-Fed. And then inflation was likely to be a little bit more under control. That seemed to be the opinion of market participants, that the FOMC meeting meant that the Fed was taking inflation seriously, the yield curve flattened, and the Dow cheered that.